Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Daybreak Weekend, our global look at the top stories in the coming week from our Daybreak anchors all around the world. And straight ahead on the program, a look at the struggling U.S. housing market. I'm Tom Busby in New York.
I'm Stephen Carroll in London, where we're looking ahead to how issues around trade and the war in Ukraine will feature at the upcoming meeting of G7 finance ministers and central bankers in Italy.
I'm Brian Curtis in Hong Kong. We look ahead to the inauguration of Taiwan President-elect Lai Ching-te and what it means for Taiwan, U.S. and China relations.
That's all straight ahead on Bloomberg Daybreak Weekend on Bloomberg 1130 New York, Bloomberg 99.1 Washington, D.C., Bloomberg 106.1 Boston, Bloomberg 960 San Francisco, DAB Digital Radio London, Sirius XM 119, and around the world on BloombergRadio.com and via the Bloomberg Business app.
Good day to you. I'm Tom Busby, and we begin today's program with home sales for the month of April, the heart of the spring home buying season. We get existing home sales on Wednesday, new home sales on Thursday. What will these reports tell us about the health of the U.S. housing market, about housing affordability, and the overall economy? For more, we're joined by Drew Redding, Bloomberg Intelligence U.S. home building analyst. Drew, thanks for being here.
Thanks for having me.
All right, so what do you expect to see this week?
Well, I think some context is important here. We've been describing the housing market as a tale of two markets. Existing home sales finally broke back above that 4 million annualized run rate 2 months ago, and we think they'll probably remain above those levels. But what you have to keep in mind is the data that we're seeing now still reflects a period where rates were in that high 6% range. Subsequently, rates rose to over 7.5%. So we think that data is going to trickle in the next couple of months. We expect some volatility on the existing home front side, over the next couple of months and through the summer. But big picture, it's difficult to get too excited about a significant rebound in existing home sales when you have mortgage rates that are still hovering around 7%. We just actually fell below that for the first time since April. We're at about 6.9 right now. So, that will add a little momentum to the market. But big picture, we're not expecting any type of significant rebound maybe until we get to 2025 and even into 2026. Now, you contrast that what we're seeing in the new home market. Demand in the new home side has been a lot stronger, and that's because builders have been successful in pulling the levers in terms of financing incentives, closing cost assistance, and things like that. So, they've been able to make the monthly payment a little more palatable than what you can see on the resale side.
Well, that's the problem, isn't it? Home affordability. You've got rates near 7%. You've got record high prices for new and used homes. Plus, there's just a lack of homes on the market. I mean, how are people affording this?
It's 100% all about affordability. Affordability is, hovering near the worst levels on record. We were looking at some data from Redfin. It actually shows the median monthly payment is about $2,900, which is 14% above last month. And that's more than double where we were prior to the pandemic. You've had prices which increased more than 50% since the beginning of 2020. And, depending on the index that you look at, we're either pretty close to those levels now, if not higher. And there's certainly been some momentum of late with pricing. And part of that has to do with what you mentioned, inventory. In the resale market, we're still at about 3 months of supply, which is historically low. And that's putting a floor on the prices. There's demand out there, and there's not a whole lot of inventory, and that's pushing prices up. Now, we have seen inventory in some markets start to rise, which is something we're going to keep our eye on. You look at markets in Florida, a couple markets in Texas, like Austin. So that could have implications for prices should inventories continue to rise. But you're right. At this point, it's just difficult for the consumer to afford a house, and that's really what's held the market back.
Now, this has also impacted the troubles in housing, the broader economy. Not always bad, or not all bad, but like home builders, home renovation, still going pretty strong. But people aren't buying big-ticket appliances. Home Depot confirming that. High-margin items, grills, power washers, refrigerators, it's really impacting a lot of other businesses.
It's certainly been a challenging backdrop for the consumer. You have to remember, they're battling the cumulative impact of inflation. So, even when you see inflation coming down to 3%, it's still inflation, and it's been going on for years. So it's really the cumulative impact that we're seeing. You're seeing credit card balances rise. And, when you talk about some of the names that we cover, like a Home Depot and a Lowe's, they're really seeing it on the discretionary side and on the big ticket products in particular. They've got a little bit of a unique situation in that some of the products they sell are what they call one-time purchases. So if you think about, the early days of the pandemic, people loaded up on, grills, patio furniture, lawnmowers, and things like that. And it's just something that you don't need to replace as frequently. So they've been contending with that. But at the same time, something they mentioned this quarter that was pretty interesting is that they're seeing weakness in projects that are typically debt financed, which goes back to that mortgage rate or the interest rate dynamic, and that it's just a lot more expensive to get these projects done. So we're seeing, kitchens and bath projects being deferred, or we're seeing projects, kind of being toned down in size. We've heard that from Home Depot. We've heard that from a handful of the building product manufacturers as well.
Yeah, you need a new roof. You've got to get a new roof, but maybe not a new kitchen. Looking ahead, do you see or can you see any green shoots later in the year or into 2025? Or does it all depend on maybe what the Fed does with interest rates?
Yeah, well, look, I think housing broadly is going to continue to ebb and flow with what happens with interest rates. That being said, I mean, if you could call this a bright picture, I mean, existing home sales are the lowest level they've been in, 2 decades. So we think we've probably reached or very close to trough levels. So we do think that if rates start to pull back a little bit and you get to that mid 6% range, you could start to see some growth towards the back end of this year and as we get into 2025. So the way we look at it now is there's not a whole lot of downside risk with where the economy stands now, with where employment stands now. Obviously, if those things deteriorate further, that's a concern. But looking ahead, we think you could start to build a little bit momentum looking into next year. And on the remodeling side, we think that a lot of these projects, as we mentioned, are being deferred. So we think there's a lot of pent-up demand that starts to get unleashed in 2025 and 2026 as rates pull back. People are able to tap that record amount of home equity they have, and we think that that'll ultimately support a rebound in big ticket spending.
So if you're a painter or a drywall guy, just hold on tight. Well, our thanks to Drew Redding, Bloomberg Intelligence U.S. home building analyst. We move now to big tech and chip maker Nvidia, which has been on a roll, seeing its market value balloon thanks to demand for its artificial intelligence chips, also its data center and gaming offerings. What does it all mean for the company's earnings out this Wednesday? Well, for more, we're joined by Kunjan Sobhani, Bloomberg Intelligence Senior Semiconductor Analyst. Kunjan, thanks for joining us. Why don't you start right away? What do you expect to see in NVIDIA's first quarter earnings?
Well, just similar to what we have been seeing for the past almost 6+ quarters. We again expect a solid beat and raise coming into this earnings. Throughout the quarter, we have seen multiple strong demand signals, namely its largest cloud and hyperscaler customers, all upsiding their CapEx spend guidance for AI for 2024 and 25. Second, we have seen strong demand from outside of the cloud players, namely sovereign wealth government entities, other enterprises, large enterprises like the deal we saw about Elon purchasing about $10 billion of AI capacity from Oracle, etc. So, and at the same time, we have seen the H100 lead times continue to shrink. What that means is supply continue to keeps up for that product family. So the combination of all of this gives us confidence that, again, they will be coming out with a solid beat and raise.
Now, NVIDIA appears to be far ahead of a lot of U.S. competitors on AI. And how important is that for this earnings and for the company?
I mean, it is important, and that's why you see this level of positive sentiment around the stock and what you've seen in the return. I mean, it still continues to be the market leader and has a market share in the mid-90s, which we expect it to continue at least for the foreseeable future. So that is definitely a big part of the story right now.
And to keep up with that demand, how is it growing? Where is NVIDIA expanding here in the U.S. and worldwide?
I mean, it is global at this point. If you think about it, look, it's the only sort of almost the only game in the town, and the town being globally. If you want to set up a high-end AI server to train a model, there's only really one go-to full stack solution right now, which is Nvidia. We do have AMD, which has entered the game, but again, the scale is significantly different here. Nvidia is going to be generating about in the sort of between 50 to $80 billion from its data center this year, and on the contrast, AMD is projected to generate about $4 billion from its GPU business. So, I mean, look, the demand is globally. Now, when it comes to allocation, when it comes to where its customers are residing, a big portion, majority is in US and the West, but it is also trying to allocate as much as it can to most of its customers outside of US.
Well, that brings me to the next point, the growing trade war between the U.S. and China. There was a ban on advanced chips, selling them and other technology to China implemented last year. We know that President Biden just last week upped the ante with a whole bunch of tariffs on all kinds of Chinese products. How has that impacted Nvidia and the wider chip, semiconductor market here in the U.S.?
Yeah, it has impacted Nvidia, I would say, the most. If you actually go back almost 2 years back, the very first ban in this data center space came on Nvidia-specific chips. So from that time, when China represented about mid-20s% of revenue of its data center segment, all the way to now, this year, we expect it to be somewhere between mid-single digit to high single digits. So that gives you a magnitude that it has lost the potential that it could have been shipped in absence of these bans in billions of dollars to China. So that's the company that has most been impacted. And I think a lot of restrictions and bans have heavily focused on Nvidia chips initially. What you're seeing now is sort of those bans expand, their range getting expand as, again, regulation always runs behind technology. So what you're seeing is now those impacting other players like Intel, like Qualcomm and AMD, etc.
NVIDIA's the big name, and NVIDIA's first quarter earnings out this Wednesday. Our thanks to Kunjan Sobhani, Bloomberg Intelligence Senior Semiconductor Analyst. Coming up on Bloomberg Daybreak Weekend, a look ahead to the upcoming meeting of G7 finance ministers and central bankers in Italy. I'm Tom Busby, and this is Bloomberg. This is Bloomberg Daybreak Weekend, our global look ahead at the top stories for investors in the coming week. I'm Tom Busby in New York. Up later in our program, we look ahead to the inauguration of Taiwan President-elect Lai Ching-te and what it means for Taiwan, the U.S., and China relations. But first, G7 finance ministers meeting this week in the northern Italian town of Stresa as representatives reflect on the fragmentation of global trade. For more, let's go to London and bring in Bloomberg Daybreak Europe anchor Stephen Carroll.
Tom, Italy's finance minister and central bank governor will be hosting this G7 meeting on the banks of Lake Maggiore. It's a majestic setting to discuss some weighty topics, not least the latest ratcheting up of trade tensions between the United States and China, as well as Russia's war in Ukraine. Now, the Ukrainian finance minister will be attending, with issues around the use of frozen Russian assets on the agenda. Both the United States and the European Union have struggled to mobilise the help that Kyiv needs to defend itself, as aid has been caught up in other political debates. In the EU, there's also a discussion about how best to bolster the European defence industry. Here's what European Investment Bank President Nadia Calvino told Bloomberg that her institution is doing about this.
I think it's quite clear that we need to step up our support to Europe's security and defence industry. We need to reinforce our capacity in this area. And the European Investment Bank is ready to play its role in supporting Europe's defence industry. From this point of view, what we have done is put forward an action plan, which has been endorsed by our board last week and is up and running since 1st of May, and which will indeed allow us to finance dual-use technologies and infrastructures, removing a constraint that existed, which required that more than 50% of future revenues should come from the civil use side for it to be financed.
Right, and so now it's 0%, but there still is this mandate of dual use. So just to understand better how this actually works, because this doesn't mean that you can, for example, invest in something that produces, say, ammunition, which isn't what is in high sort of need right now for Ukraine and in Europe, correct?
Well, we are an investment bank, and the mandate from European leaders was clear that we should step up our support to Europe's security and defense industry while safeguarding our financing capacity. And this is what we have been doing. This is what we are doing. The reaction of financial markets is confirming that we're on the right track, and our board of directors endorsed our strategy as recently as last week. And so now we have this action plan, which should allow us to speed up with the investment of the 6 billion euros, which are already earmarked for this industry.
Yeah, and so that was also, 6 billion is also quite a small proportion of the entire fund. Are you looking at potentially boosting that over the years, just given the scale of the need that there is in European defense?
We have 6 billion euros. Actually, the program had 8 billion euros earmarked. We have only invested 2 billion euros. We are focusing right now in speeding up the investment of these 6 billion euros and also getting up and running a capital investment of 175 million euros in startups, innovative startups also in this area.
And for those 2 billion, was it just because there wasn't demand for the loans, or is it because there were all these rules around and you hope that that capital can get to work?
Well, obviously, we are now expanding, enlarging the scope of projects that we can finance. We're also speeding up these divestments with a single-stop shop, with a dedicated team, and we're going to be proactively reaching out. Actually, we have launched a call for projects. And so our expectation is that in the second part of the year, there will be more projects, more demand, as you named it, and that we will be able to step up our support to Europe's security and defense industry while safeguarding our financing capacity, which is the mandate from our
And when
leaders.
you say safeguarding your financing capacity, it's to do with the credit rating. You think that could be jeopardized by investing in these sorts of companies? What exactly is the relationship there?
Well, obviously, credit rating agencies, but also investors are looking carefully at many areas that have to do with our financing capacity. So far, as I was saying, financial markets are responding as we had anticipated, and our board of directors endorsed last week our action plan, which will allow us to step up our support.
And in terms of the EIB's role in rebuilding Ukraine and funding that, how do you imagine the EIB's role in that?
Well, we're playing a very important role already. We're probably the key financing investor partner to the Ukrainian government. We're in very close contact. Only some weeks ago, I signed a memorandum of understanding with Prime Minister Shmyhal, and I hope that in June we will be able to already sign some specific projects and speed up our investments on the ground in large infrastructures, energy, transport, also in municipal and local projects having to do with restoring and renovating, rebuilding schools, hospitals, houses, and also supporting the private sector. Many of these projects are already ongoing, and as of the signature of the Memorandum of Understanding, I think we will be able to do more. While the war is unfortunately going on, I hope we will be able to step up our support with the rebuilding of the country once the war is over.
That's the European Investment Bank President Nadia Calviño there, speaking to Bloomberg's Oliver Crook in recent days. Now, Oliver will also be attending the G7 meeting in Stresa, along with finance ministers and central bankers. I've been speaking to him about it and started by asking him how much the latest announcement of increased US tariffs on Chinese goods will be weighing on ministers' minds.
I think it'll be weighing on their minds very, very much, in part because it's so fresh and it just sort of dropped just before the meeting. And then on the other side of the meeting, of course, you're going to get the initial report from the EU in terms of the EV probe that they're going into China. So trade is really going to be front and center for both the finance ministers and the central bankers who are both present there. For the central bankers, obviously, this is also a big question in terms of inflation, because if we're dealing with just one-off things, that's one thing. If we're talking about basically the beginning of another kind of trade war and tit for tat, this could have huge implications for inflation. To what degree? So they'll be exchanging notes. It's the ECB, the Fed will be there. Much of the Fed is setting the tone for global interest rates. And of course, the question will be, will China retaliate? Biden has been quite targeted in terms of this. These sounds like a lot of import tariffs on the EVs, quadrupling, but really it's only touching about $18 billion of trade, because obviously he's very conscious of not wanting to get those prices going up, particularly in an election year.
Yeah, indeed, that's a big concern for them too. Around the G7 table, though, Ollie, how much divergence is there on the approach to China and trade?
So I think it's interesting if you look at just the United States and Europe, you know what I mean? I mean, you have them sort of singing a bit from the same hymn sheet in terms of the sort of general message, which is that China has engaged in unfair trade practices. But Macron, for example, has really kept the door open, saying that he's not going to be dragged in around the world by U.S. foreign policy, which is sort of an allusion to Taiwan. And the evidence of that's a message that's kind of resounded with Xi Jinping, because he came to France. He came to Europe for the first time in 5 years. He came to France, but he also came to Hungary, which is another country that kind of takes us to the within Europe question of China. China has had huge manufacturing production in Hungary. CATL, the battery manufacturer, has opened up a factory. Now we understand BYD is there. The Europeans are looking at this because Hungary is often a political outlier. Could this drive a further wedge within Europe, and could it get really China a seat at the table politically within there? And there's also disagreement even between Scholz and Macron, right? Scholz was even saying that, listen, we want to put these EV tariffs up, okay, but let's think about the consequences here. Half of the EVs coming into Europe from China are not Chinese, they are European.
Yeah, indeed. I mean, the Ukraine's finance minister is going to be attending this meeting as well. What will he be looking to hear from his counterparts? Well,
I think a lot of it is going to be a message of reassurance, right? And we saw that with Blinken when he was in Kyiv, saying that, we're still here, we're still supporting Ukraine. And the reason that there is, potentially some desire to doubt that is because of how long that aid package took to get to Ukraine. Remember, that was stalled in the House for 6 months. That $60 billion package eventually got there. And that will mean, some military relief and some financial relief for Ukraine, but it's cost them very dearly on the battlefield. We've seen infrastructure be hit. They were swatting a lot fewer of the missiles out of the skies. And the question for the G7 going forward is, how do you get the financing for Ukraine on sustainable footing? And that will be one of the direct and central conversations there.
Yeah, because the US has proposed seizing the Russian assets that were frozen by the G7 after the invasion of Ukraine. Is that a proposal that has much support?
So it doesn't have that much support in Europe. So let's just be clear about what we're talking about here. What the Europeans favor is they want to take the proceeds from the Russian assets being sold that are kind of accruing interest and making profits. They want to take those and give that to Ukraine. But that's only about $3 billion a year. The United States is very keen on taking the underlying assets. We're talking about $300 billion of Russian central bank assets that are scattered across the world that are currently being held. They want to bring that directly to Ukraine. The Europeans are resistant to that. What has been interesting is some of the debates on how to maybe do it to make everyone happy. The United States, for example, has suggested these so-called freedom bonds, putting American branding on it, which basically is issuing bonds and using the underlying assets as collateral, so you don't touch the underlying asset, but you can still monetize it and get more of that money to Ukraine.
Now, central bankers, as you mentioned, Ollie, will be attending this meeting as well. Of course, inflation's still a big question for these major global economies. Should we expect to hear much about the broader issues around the path ahead for interest rates?
I would think so. I mean, wherever there are central bankers, there is a rate debate. And if Bloomberg is there, we'll certainly be chasing it. And we may be speaking to a few of them. I can't tell you who exactly yet because we haven't confirmed it. But there will be certainly a conversation about what the stance is on rate policy going forward. And of course, how does this trade question now front and center, how does that read through? I mean, the debate forming at the ECB is not whether or not there's going to be a cut. It's what happens after the cut. What is the default sort of stance for the ECB? Does it have a neutral bias or an easing bias? And you have people on either side of that. You have Panetta from Italy who's saying that really we should have an easing bias, maybe pushing that forward, and then Nagel from the Bundesbank saying no, we need to stay neutral until we see what happens.
Yes, that's another debate that's going to be happening at the G7 too. I mean, more broadly, Oliver, is the G7 a forum that's fit for purpose? We're talking about some of very diverse issues being discussed at this forum as well, but does it actually produce concrete decisions?
Well, let's think about what this forum is, right? The G7. For a very long time, this was the G8, right? And now it is the G7. And that happened 10 years ago. And I was actually just looking at a picture of the last G8 meeting. It's sort of astounding. You see François Hollande, Obama, David Cameron smiling, Merkel is there, and Putin is there, right? And in the last sort of 10 years, ever since the sort of invasion of Crimea, we've seen a real bifurcation, a fragmentation of the global order. So there's the question of the broader G20 and the sort of break off of the BRICS. As you mentioned, there's this, Xi came to Europe, and then Putin went to Beijing saying that they're going to have a very good relationship for generations to come. So there's a question of how much influence the G7 has over others. But even within the G7, there is all this talk about sort of protectionistic policies of China. The G7 itself within there is being being protectionist itself. I mean, the Inflation Reduction Act, there's not a lot of talk going on around it, but this hits Europe very, very hard. And you're not hearing so much about the American-European relationship. Post-pandemic, it was all about friendshoring and securing supply chains that way. But really, even under Biden, you're hearing a slightly more America first kind of policy and Europe alone. And that is really hanging over this G7 meeting.
Thanks to our correspondent Oliver Crook, who will be bringing us coverage on Bloomberg Radio and television of the G7 finance ministers meeting in Italy in the coming days. I'm Stephen Carroll in London. You can catch us every weekday morning here for Bloomberg Daybreak Europe, beginning at 6 a.m. in London and 1 a.m. on Wall Street. Tom?
Thank you, Stephen. And coming up on Bloomberg Daybreak Weekend, we look ahead to the inauguration of Taiwan's president-elect. I'm Tom Busby, and this is Bloomberg. I'm Tom Busby in New York with your global look ahead at the top stories for investors in the coming week. Taiwan's president-elect, Lai Ching-te, will be inaugurated in the coming week. Let's go to Bloomberg Daybreak Asia host Brian Curtis and Doug Krisner for more.
Tom, William Lai takes office at a critical time with tensions running high. In recent days, China said Lai faces a choice between peace and confrontation. On Wednesday, Beijing said that it would sanction 5 Taiwan political commentators and roll out a new law to punish separatists.
In addition, Taiwan finds itself caught in the middle of worsening relations between the U.S. and China. Now, on the economic side, President Biden just slapped new tariffs on Chinese imports and accused China of cheating on trade. Then there's the political front. China's foreign ministry bristled at reports on the U.S. and Taiwan conducting naval drills last month.
Additionally, the U.S. will send a delegation of former officials to the inauguration. The fact that they're former officials may placate China to a certain degree, but Beijing still won't be happy. As such, Doug and I thought it would be a good time to take a closer look at the trilateral relationship and see how it might change under the presidency of Lai Ching-te. We asked John Liu, Bloomberg executive editor in Beijing, if Taiwan is at a crossroads.
Taiwan is definitely the most dangerous flashpoint in this relationship between the United States and China. Whether William Lai's ascendance to the presidential office will be the spark that sets off some sort of conflict, I think that looks relatively unlikely at the moment. We are expecting him to stick to the line from the previous administration of Taiwan. He has said that publicly. He plans to be a continuity president, if anything. I think the speech that he will be giving at his inauguration will be tuned to try and both show him and his party as defending Taiwan, but also not to cause any upsetness in Beijing or Washington.
Bloomberg executive editor in Beijing, John Liu. Now, for discussion on this, we're joined by Bloomberg's Taipei bureau chief, Samson Ellis, and deputy bureau chief, Cindy Wang. So, Sam, let me go to you first. Is John right there that Lai is likely to be pragmatic and push for continuity?
Those are certainly the indications we have right now. Obviously, we're speaking before he has taken power, but over the past year, he has strenuously emphasized that he will stick to Tsai's previous line of being willing to talk to China, but only on the basis of equality, that the two sides sit down and speak to each other as equals. That's obviously a condition that China is very unlikely to be able to accept. Plus, he's also said that there will be no formal action for him to in some way formalize Taiwan's independence. So I think that's his way of signaling to the United States and to Beijing and to the Taiwanese public and the world at large that there isn't going to be some kind of declaration of independence during his presidency, to try and put people at ease that he's not going to be a troublemaker throughout his term.
Cindy, from what I understand, William Lai took about 40% of the popular vote. When you look at a number like that, you may conclude that the mandate that William Lai has is not that strong. Am I right about that?
Yeah, exactly. He only got 40% of the vote in the January election, and that made him the first Taiwan president since year 2000 that didn't win an outright majority vote. So that's a relatively weak mandate. And also the Taiwanese voters just gave the majority of the legislature to the opposition KMT, hoping that there would be some check and balance in the government. So I think with that challenges, that means Lai's any policies or reforms is going to face the legislative hurdles. So going forward, the next 4 years is going to be a very daunting task ahead for him.
Cindy, one would think that Lai, given his past and sort of leaning toward Taiwan independence, that he would be even less popular with China than Tsai Ing-wen was.
Yeah, definitely. So just to give you a little bit of context, the ruling Democratic Progressive Party, or the DPP, championed a strong sense of Taiwan identity distinct from China. And Lai used to be known for his pro-independence stance. He used to describe himself as a pragmatic worker of Taiwan independence. Although during the presidential campaign, he has been very measured. He didn't talk about independence at all. Instead, he said Taiwan is already a de facto state and there's no need to declare independence. Still, the past comments and past records made him very unpopular with China. China would view Lai with deep suspicion and deep distrust, and China has already labeled him as an instigator of war or a separatist. So it is believed that going forward for the next 4 years, since China has already cut off all the communication with Taiwan since President Tsai took office in 2016, and for the next 4 years, it's unlikely that it would possibly resume any communication with Taiwan, given their deep distrust of Lai. So one important thing to watch from Lai's inaugural speech would be if he has any comments or new narrative about the cross-strait relations going forward, or if he is able to propose any kind of framework that could break the deadlock between China and Taiwan and resume the communication between the two sides again.
Sam, the current president, Tsai Ing-wen, has been in office for 8 years now, 2 terms, term limited. During a big chunk of that period, since about 2019, I think, that we have seen a much harder line from Beijing when it comes to Hong Kong. And I'm curious about possible ripple effects. Has a harder line on Hong Kong impacted the politics of Taiwan in any way?
Well, it certainly did in 2019 and 2020, the last election when Tsai won a resounding re-election. At that point, we were at the height of the authorities' crackdown against protesters in Hong Kong, and that definitely engendered a sense of sympathy from voters in Taiwan and no desire to move towards a friendlier stance with Beijing. But then the long-term repercussions of that are certainly that, China's offer for Taiwan essentially is, the same as to Hong Kong, one country, two systems. Accept that you're part of China, and we'll let you keep your democratic system and your way of life largely untouched. But the big lesson from Hong Kong, obviously, is that they promised to keep that for 50 years, and then they didn't. They just swooped in, and they have radically changed how things are run in Hong Kong, and that really has served as a lesson for Taiwan as a whole.
And Taiwan people have spoken very clearly that is not something that they can accept. But on the other hand, Samson, and this is something we've talked about before, we often hear that, despite what you hear from pundits about all of this geopolitical fear and threats, Taiwan people are actually pretty relaxed. They've been dealing with this for more than 70 years. Is that likely to continue, do you think, over the next 4 years under Lai?
For sure. I mean, one of the remarkable things about being in Taiwan, living in Taiwan, is seeing how much more nervous people outside of Taiwan are than people inside Taiwan. Like, we'll often, get very worried phone calls from Hong Kong or Singapore or London or New York. People worried, is the invasion about to happen? How worried are you? And in Taiwan, life goes on as normal. People are, as you say, they're very used to these threats or these tensions with China. As for how things will play out over the coming 4 years, that's going to be very interesting to see. Sources do indicate to us that there's a good chance that China slowly starts to ratchet up the tension. As you pointed out at the beginning of this conversation, they appear to already be doing that with new sanctions against certain individuals in Taiwan. And so these are these so-called gray zone tactics that China deploys, like a range of measures that fall below the threshold of outright warfare that are designed to influence and coerce Taiwan to do Beijing's bidding. The thinking is that we're likely to see a big increase in these kinds of tactics over the coming 4 years in an effort to stop Taiwan and voters in particular from wanting to give the DPP another 4-year term.
Cindy, it's remarkable when you look at the degree of concentration of semiconductor manufacturing in Taiwan. This is obviously a TSMC story, but we know one of the things that the U.S. has been doing, to a lesser extent Europe, addressing this perhaps over-concentration and trying to diversify away from Taiwan. Is there concern about that when you look at the economics of the island?
Yeah, there is certainly some concerns and debate within Taiwan about whether we should let TSMC to continue to broaden its chip plants overseas. And that's also a question that we asked the incoming president, Lai Ching-te, last August when we had a chance to sit down with him. And then Lai said at that time that he won't stop TSMC from building more chip plants in the U.S. or in other countries because he thinks Taiwan has a responsibility to the world. And the fact that TSMC is diversifying its chip plants and building chip plants overseas, it's to show that Taiwan's economic advantage and the power of Taiwan.
That said, Cindy, we spoke with Sean Darby from Mizuho Securities, and he said that the global trend of onshoring will actually mean that semiconductor output in Taiwan will slow. Now, it'll still be TSMC to a certain degree and other companies, but jobs in Taiwan may suffer.
The irony is that the competitive part of Taiwan semiconductors is to some extent being hollowed out through this, sort of onshoring in the developed world, and in that respect, you're not going to get the same level of output growth that you would have had in preceding cycles, sometime in 2 or 3 years from now. In fairness, that Taiwan is going to sort of see below trend growth from 2025, 26, purely because they don't have that same facilities in situ.
And Cindy, will that be a problem for Taiwan, that some of these jobs will move offshore?
I think that's definitely something people will keep a close eye on from incoming President Lai's inaugural speech. It is believed that he will certainly talk about his plans to boost Taiwan's economy, and also he has already previously vowed to continue strengthening Taiwan's chip sectors. We know that before his inauguration, he's already set up meetings with representatives from the chip industry. He's trying to understand what would be the best policies for the industry and for the country as well. So we're sure that from his inaugural speech next Monday, we're going to hear more details about his plan to beef up Taiwan's economy and how to strengthen the chip industry going forward.
Sam and Cindy, thank you so much for joining us and helping us set up the inauguration of Taiwan's new president, Lai Ching-te, that will be happening in the week ahead. Samson Ellis is Bloomberg's Taipei bureau chief, and Cindy Wong is deputy bureau chief in our Taipei newsroom. I'm Doug Krisner, along with Brian Curtis in Hong Kong. You can catch us weekdays here for Bloomberg Daybreak Asia, beginning at 8 a.m. in Hong Kong, 8 p.m. on Wall Street. Tom?
Thank you, Doug, and thank you, Brian. And that does it for this edition of Bloomberg Daybreak Weekend. Join us again Monday morning at 5 a.m. Wall Street time for the latest on markets overseas and the news you need to start your day. I'm Tom Busby. Stay with us. Top stories and global business headlines are coming up right now.